I think I'm talking on mute there. Let me make sure that y'all can hear me on... No sound, no sound. Uh-oh. Apologies on the YouTube, I was muted. All right, so we should be unmuted there on the YouTube. I apologize, I had the wrong thing muted, so now we're good. We're still trying to figure out this whole streaming thing, so give us a break. All right, so we should be good on that. All good now, great. All right, so basically what I was talking about there, I was ranting a little bit. Do we rotate out of tech from here, or do we not rotate out of tech? That's pretty much the ideas there. And rotation doesn't necessarily have to happen. We could just see some kind of, we could have rotation and we get some profit taking, and then we go bargain hunting. And then we go, where it could be no rotation and just keep our money parked right where it is, and we stick to the relative outperformance, which we all know that the overall outperformance is now in tech. And so with that being said, let's kind of jump into things. We got an interesting week. We got earnings kicking up a notch here. We got the Fed coming up in 2 weeks. So we just kind of want to be prepared on all fronts here. If we're looking at the SPY here, one key crucial level that we want to keep an eye on is definitely this 786 retracement from the all-time high to the swing low. We measured that out from the swing high here, from the all-time high at about 480 and down to the swing low at about 340. And that gives you, your ultimate retracement levels there at 414, 429, and now 451.76. So this is our next little spot here to kind of maybe take a pause, maybe take a breather. If you take a look at the SPX, that level is going to be about 45.34. And, honestly, there's not many issues here. There's not a whole lot of nuances at this point. There is one big, curveball here when we take a look at the NASDAQ, but we got some pretty good signals here since March. We've been in an uptrend for quite some time now. We've got good positive signals since March. We entered a squeeze here in April, and since then we've pretty much slingshotted on higher. So pretty much fueled by tech, the AI names, the AI rally has been absolutely incredible. But we have seen a lot of reversal candles, especially when you look at some of these tech names, and especially if you look at NASDAQ, or if you look at NVIDIA, AMD, and so forth. And my advice at this point is pay attention to your smaller time frames, because your smaller time frames are starting to see a little bit of damage. And now the question is that smaller time frame damage going to spill over into the longer term time frames? So what I'm watching here is, I'm going to pull up another chart here, is we're going to be paying attention to the hourly, the 15, and the 5. We're going to kind of keep it a little interesting, but the main key thing here that I'm watching is that we haven't really had a dip down to the 21. This could be a possible entry point on the SPY, but when I'm looking at my oscillators, oscillators tend to run in cycles like this, and when we're at this point in the cycle, we're way up here. The next buy cycle would be when things are up here and we get an up arrow, and this is where I'm looking at down here on the thrust indicator. So what I'm looking here to see if we can get through some of this sell cycle, especially if things continue to be damaged, and then we get an up arrow, and things could come up to the mid level here and also give us an up arrow. That could possibly be a potential buy area. So there's a few, we have to wait and see. It's almost like being at the blackjack table, and well, not necessarily the blackjack table, or you could, or just the poker table if you're playing Texas Hold'em. You're sitting there at Texas Hold'em, you got a pretty good hand, that the dealer probably has a pretty good hand, but you really just need to see one more card be laid out, and that's kind of what we're waiting on at this point in time. We want to see, are bulls going to step up and buy at the at the hourly 21? You can see here on the daily, we're super crazy extended at this point in time. There's a lot of air between price and the mean. And we talked about this last week, where price tends to revert back to the mean, and we had this 6 day move here, reverted back to the mean. We ping ponged off of it. We came back down, almost kissed it. We came pretty close, and then we slingshotted from there and had a nice little wave to push higher. And now we're just kind of at this stall here, especially with big tech. Now, when you look at the daily chart, I want you to ask yourself, are you a buyer up here? Are you buying into these fresh highs, or do you want to wait a little bit and maybe get a better entry on stocks that you're looking at? And my argument would be, I'm definitely not buying up here at these highs. At this point, my positions are relatively small, and the positions that I do have on that are bullish in nature, I also have a hedge put in place. I have a few debit spreads to the put side to hedge against those longs in case we do get some downside, and just to kind of protect things. And there are a lot of ways that you can do to hedge against, say if you're long delta, or if you have a lot of positions in tech. You can hedge that by doing some kind of butterfly spread, or you can do some sort of debit spread to the downside. And when price comes back in, you can take profit off of those put spreads that you put a hedge on. And then once you get that bounce back, then you could start to look at, shedding on the way back up from your long. So, what I'm doing right now is just kind of being patient. I don't necessarily want to buy here. I got a few long positions, but they're not heavy. And what I'm waiting on to see is, how is the market going to handle a pullback? We know that this market is pretty darn resilient. It's pretty darn juicy. And in fact, there's still a lot of really good setups out there that can continue to march ahead. And one thing that I am particularly watching is Amazon. Amazon had this incredible breakout last week, and we actually took profit on our positions. Also, I had a debit spread on this one, took profit. Kind of wish I had a butterfly, but that's all right. Profit is profit. But one thing you want to look at is this daily squeeze right here hasn't quite even fired long yet. So if you think the gas is empty here, it's not. We could get a pullback here, sure, but then I'm looking for this thing to launch ahead. So I'm definitely keeping an eye on Amazon, and these are the kind of setups that I'm looking for. We have these nice tight ranges that broke out, and squeezes are just now getting heated up. So I'm looking for Amazon to kind of hold steady and then push higher as it gets closer to its earnings season. And ultimately, I think Amazon does have a chance to reach, all the way up to 150 and maybe even 170 in due time. So, Amazon is definitely one of those mid to longer term swings that I am possibly looking at. But for now, I'm just waiting on this cycle to, kind of do its work there. One thing that, of course, when we go back to the SPY, obviously, there is going to be some support down here at the 444 level. This will ever load up. Let's see. There you go. Here's the, I didn't have that marked, so let's go ahead and do that. Obviously, we're going to use the prior resistance level as our support. So we broke out a 444. Going to use that as a support. And we also have the dynamic support, which is the 21 EMA, which is right at about 440. And then, of course, we got another level of support down here at 436. And then, of course, if we go even a deeper pullback, 430. But overall, 444 is the level to watch for now. And then you can move on to your secondary support. Resistance, of course, is going to be at this 452. And then from there, once we break out of 452, there's really not much until we hit about 460. So yeah, the SPY does still have some wiggle room. And don't forget, I still have an overall bullish target here on the SPY at 510. If things want to continue to be, pretty crazy. So that is going to be a longer term target. And I still hold some lottery further. I got some December, what were they? They're like 500 calls or something like that for December. They're just like a lottery ticket for December. So, we'll see what happens there. Of course, if it hits, awesome. If not, oh well. I'll lose $100 or however much I put into it. So, keep an eye on that. Now, the main concern here with the Nasdaq. All right, the Nasdaq has had an incredible run these past few days, and its tech continues to be impressive as all get out. It's been very strong. But one thing that I want to bring to your attention to is we have essentially hit 3 sigma or 3 standard deviations, and I had a picture of this. I don't know, I must have closed it. Here we go. So here's where we're at with the Qs. If you bring up a Bollinger Band and set it to 3 standard deviations on a 20-period exponential average, you can see here on this chart that we haven't really gone to that level hardly ever. It's very rare that this happens. You could argue that you kind of tapped it here, maybe here, but look at this recent run up. You didn't even come close to hitting 3 standard deviations. And what that tells us here, here's where you're hitting it as the Bollinger Bands even expand higher and you're tapping 3 standard deviations. Now, why is that important? Well, it just pretty much means that we've essentially done everything that we can at this point. If we look at the empirical rule, it states that 99.7% of the move occurs within 3 standard deviations from the mean. So what that means is if you think it's going higher, you have a 0.3 chance of that occurring. Think of that probability, 0.3. We've had almost 100% of everything moving within 3 standard deviations. There's not much wiggle room at these heights on the Nasdaq. The Nasdaq is going to have to come back in and recycle and then push ahead from there. This is not rare. This is rare. It doesn't happen often. You can look back on your charts, put this up, put a Bollinger Band. This is different than ATR. If you put in a 3 ATR or 2 ATR, you'll see that the calculations are a lot different here. So what we're looking at here is a extreme probability that there's not much room here for the Nasdaq. And what I want to watch here, especially with the Qs, is the hourly time frame. And if we can get a pullback, a deeper pullback, and it just doesn't have to be too much, because as those Bollinger Bands expand and price moves away, then we can cycle back on through, and you see how we're up here on this cycle down here on the oscillator. What we just need to see is it kind of curl back through and get us a new arrow. So that's what I'm paying attention to. You have this shooter candle also on the Nasdaq, and we're still looking at a high probability that the Nasdaq does reach new highs here at 405. So that is definitely still well within the cards. I'm not doubting that it does break into new all-time highs at this point. I'm just saying in this short-term time period, we have gone well above the expected move, and mathematically speaking, there's not much juice left in the tank. It has to come back some, maybe even fill these gaps and still maintain. Even if it comes in and fills in those gaps, you are still maintaining bullish structure on the charts. You still have stacked DMAs. You are white over blue, blue over red. You're trending higher, higher highs, higher lows. You're in a really strong uptrend within this market, and that is all that it is. A pullback here is just a pullback, and this is one of the many reasons why I was like, I need to start hedging. And even, Duke, he piled on a bunch of put options at the end of the day Friday. We'll, of course, see how that pans out. But if you're looking at this, I'm definitely not buying here. I put on a Pepsi play, but that's a defensive name. So if we do get some rotation out of tech, we also have the rebalancing of the NASDAQ this week on Friday, I believe that's this week. So we are going to be paying attention to that. I was looking out for news on the rebalancing because they were supposed to release how much rebalancing was going to be had. Now, if depending on the way that they do the rebalancing based on shares outstanding or the weighting of the shares, depending on how that goes, Apple, they'll either need to be forced to sell 9 million shares of Apple or 38 million shares. So there's a big difference there. And I'm just kind of waiting to see, that press release from NASDAQ on how they're going to do that. But overall, there's not a whole lot of nuance here. This is still a really bullish market, and you can confirm that with the yields here. If we bring over this chart, the yields got absolutely beat up after having that incredible run the prior week, where tech kind of got whacked here. We hit our target on the yields, and then we just puked all the way back down, back into the prior range. And now we're just kind of seeing if we hold this trend line. If we look at the dollar, the Dixie, we can see that the dollar lost a long-term support level right here at the 101 level and has just moved lower for that. That is also a nice tailwind for tech, really. And we can also confirm that by just looking at the bonds, too. The bonds have had a nice little rally, and, we had this breakdown move, and we took a look at this. It was either last week or the week before, where we had this nasty breakdown on the bonds, and we came down to support even to the measured move here off of the swing high, swing low to the swing high. That's just a measured move from here to there, and that gave us a target, which gave us a nice confluence here at this 122 level. And since then, we've bounced. Now, the question is, can we get a bull flag here and break higher? And if that's the case, that'd be good. But we also want to keep an eye on the uninversion of the yields, but we're not anywhere close to that. So yeah, things are looking pretty good. And then also we can confirm it with the HYG. Here, let me move that over here and bring up this chart of the HYG. HYG is the junk of the junk. If the junk bonds are moving, that's an incredibly bullish sign here for the HYG. I apologize because I haven't been updating my thing there on the streaming. So there you go. So we're looking at the HYG now. The HYG has had a big breakout move here. This is definitely very bullish for the market. Market breadth has been absolutely incredible across all markets there. And we just kind of bumped our head here at resistance at this 75, 76 level. So now we're going to see if do we just roll back over from here, if tech gets a little bit of profit taking going on and we start to sell some of these earnings. We got Netflix and bank earnings. And I know we got a question on there. Lots of earnings by the banks this week. I think banks, they continue to beat. We kind of seen that with JP Morgan and Wells Fargo and Citigroup. They all reported decent numbers, and it's the right environment for them. The interest rates are higher, and especially if you're looking at the bigger banks where the inflows have been increasing away from the regional banks. But I still do believe that financials are looking pretty decent going into this earnings season. If they do miss, then that would be kind of shocking to me. I think we got Bank of America coming up. I'll take another look here in a second. But I think they do. I think the banks do fine. I'm not too worried about that. Main focus is definitely going to be on some of these big tech guys. But as far as the HYG goes, we'll see if they can break this out. And if the junk bonds, like I said, keep the HYG up as a daily internal reading, just see what they're up to. You can also do it with the 10-year bond, the ZB. You can also use the 2-year, the ZN, depending on your personal preference. I like the ZB and I like the HYG. Let's see. All right, let's move on to the IWM here, the small caps. The small caps have been quite impressive. We've had this daily squeeze with positive thrust. We're hitting our head at the 382 here, all right? And we've come down, and we almost got our gap fill here. If you look you zoom in just a little bit. 190s, that pretty much that gap fill. We may have a little bit of a bear flag here on the hourly. That's what I'm going to be paying attention to. And it's also one of those things, you know, it's part of this sell cycle where, you know, do we come back in some and then get a new buy signal from here? So that's kind of what I'm paying attention to. I think the IWM is a buy. You got this nice weekly squeeze with upward thrust. We just got to get out of this this shell here that we're kind of stuck in. So I think 191.50 is an interesting buy, but I need to see at least a new signal here, if not on the hourly, but at least the 30-minute. You can see already on the 30-minute here that you're already in the middle of that sell cycle. And all we do need to see on the oscillator is this to curl back up, and we get a new up arrow to counter the down arrow. That's all we're waiting on at this point. We still have good structure. Small caps have been getting a lot of attention. Now, if the regional banks can continue to, if the regional banks can pick themselves up a little bit more, then yeah, the small caps look pretty darn good. I mean, we've got a lot of speculative money moving around. You know, we've seen Carvana move higher. It's just overall been a pretty frothy market out there. So it makes sense, you know, for some profit taking to enter the market. The main question to ask is, okay, if tech comes in, is that going to ultimately bring down the IWM, or do we just get that broad market rotation that we've seen before where tech comes in and the IWM just doesn't care and we break out? So your key level here on the IWM is definitely this 193.81 mark. Once we get a break above 193.81, 200 could come pretty easily. So if this tends to hold structure, yeah, I'm looking for a nice entry here to get into some 200, maybe not the 200 call, but I'll probably enter in an at the money or an in the money call for further dated. I was even looking at some September contracts that were slightly in the money. They were kind of pricey, but you know, it is what it is on that. But that is one way to play it. Go out in time. I'm looking at the September. You could do the 190s if you want. I was looking at the 180s. I think they're going for about $10 or so. But either way, you could also do a closer dated spread and get you. So you don't want to go out too far in time. We got the monthly June, July's coming up. So you could probably go out to maybe 30 days out and get you a good debit spread. You can do probably 10 wide, to be honest with you, and go from there. If you want to do a butterfly, go shorter dated for sure, just so you can capture that movement. But yeah, I do anticipate a move towards 200 soon. I'm just waiting on the timing aspect of this market. So I am looking forward to that on the IWM as long as it holds structure and momentum continues to bleed into the market. I see I got a question there on Bank of America, so we'll jump into that in just a second. Let's see if y'all are in here on Discord. I appreciate y'all. Yeah, y'all are kind of quiet. If y'all need to throw in some ticker requests as I'm ranting along here, just let me know. I'm almost done going through the broader markets here. Looking at the Dow, yeah, the Dow's had a pretty decent recovery thanks to, you know, United Healthcare earnings. You can see it's very tight here on the Dow. You could argue, you know, is this a possible, you know, interesting inverse head and shoulders here on the weekly? You just got to clear that 345 level. And if we do clear 345, our next zone here is going to be about that pretty much close to 380. So the Dow's setting up pretty interesting. And, you know, there's a lot of Dow names that I'm watching this week. Now, it's at that point where it either breaks out or it just fails miserably. We got Boeing earnings tomorrow, if I'm not mistaken. It's either tomorrow or Tuesday. I think it's tomorrow. Now, if Boeing earnings go to crap, then, you know, that could, you know, set things up. But we'll see. Yeah, United Healthcare already had their earnings. Home Depot looks pretty good. Yeah, so yeah, keeping a good eye on the Dow. especially if we get rotation out of tech. And you just got to understand that Dow weightings versus the NASDAQ weightings, they're totally different. The Dow has higher weightings in the financials and healthcare. So definitely, be mindful of that, totally different games of the market there. All right, let's see. We already looked at the dollar. We looked at the HYG and bonds. Let's take a look at crude oil. Crude oil. Dun, 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 dun. All right, crude oil's had a pretty darn impressive move. Now, the main thing here to remember with crude oil is you can change this name from crude oil to inflation. If crude oil is moving up, that's not a good sign for inflation. You might want to pay attention if crude oil gets heated. Now, crude oil, we played energy names last week with COP, and look where we've done here. We came all the way up to the daily 200. Last time we did that was back in April, and we failed miserably. Are we going to do that again? Maybe, but the difference here between April and now is that we got a nice little squeeze that is firing to the upside. The weekly squeeze is starting to get more interesting. I don't quite have an up arrow just yet on the weekly, and we're seeing if we can come out of this sell cycle on the smaller time frames. If this breaks out, that means the Fed has dropped the ball and inflation's coming back. So we definitely want to pay attention to crude oil and that aspect. Crude oil and energy have a very big impact on inflation readings. So we don't want to let our guard down just yet. I do think inflation is ultimately dead, but yeah, this could give us a very interesting pop. And ultimately, crude oil, I still hold the idea that crude oil doesn't get really interesting until we break above 82.64. And yeah, until we break above here, I'm not too terribly concerned, but it is interesting that we did come back up to the daily 200 and rolled over from there. So yeah, and crude oil, yeah, we played COP. That worked out well. One name that I am watching here on the energy side is ExxonMobil. ExxonMobil has not really participated too well. It hasn't participated too kindly. We're right here trying its best to hold this support at 100. If we start to crack 100 or this 99 zone, then she's got quite a long ways to go. Let's see, we can go ahead and measure this move, because what's interesting here too is that we're right at a possible support zone that we could break. We also have a daily squeeze that's looking to fire short. We have a weekly squeeze that's firing short already. We have negative thrust here, still in a sell cycle. The oscillator is neutral bear. It's only neutral because the red line's still above 50 at least. So ZOM is looking kind of juicy for some potential downside. If crude oil wants to continue to roll over, yeah, ZOM's going to be my homeboy here to grab some puts and flush it on lower. Now, we could easily just as well just bounce right here and move higher just because we are at that support level. So we do want to be somewhat, careful. Say if we curl back up, I want to see a rejection of the hourly 21. This is where I want to enter puts and just ride the wave back down. So ExxonMobil looking pretty juicy here for some downside. Now, I know the first question here on the ticker request is Bank of America. So regional bank, we do have earnings on Monday. Let's see, let me double check. Tuesday is when we have earnings on Bank of America. I do think that they beat, but I'm not really playing the earnings game at this point in time. Not on Bank of America, at least. You do have a tight range here between 30.45 here. This was prior support. If you zoom out, this was prior support. Now it's acting as resistance. It's just been trading in this tight range between 30.45 and about 26, 27 zones. So if you If you were an Iron Condor person, this trade probably could have worked out pretty well. Now, you do have a little bit of a possible... let's zoom out to a different chart here to get a better visual. Now, the question that you may need to ask yourself at this point in time, is this just a large bear flag? Is this accumulation? What's going on here? Until we really get above this 3045 mark, and especially above the daily 200, it really is hard to be overly bullish, overly excited on this situation here, going with Bank of America. We just know that it's in a tight range. It's at closer to the upper end of that range, and we already started to fail off of the year-to-date VWAP. Yeah, I don't have a whole lot of bullish viewpoints here. I still don't have an upward arrow on the hour, on the daily, at least. We're starting to enter into a weekly squeeze. That could be a positive. Well, it could also be a negative too, because we still don't have any buy signals there. Looking at the hourly, we've just kind of trickled in some. The structure has improved because white is over blue, blue is over red. That's typically a decent sign here, but I think we're just kind of in a waiting period till we get away from earnings, at least to see how well Bank of America is doing compared to their counterparts. I definitely like the larger banks better. If I were to take a financial name, it would definitely be Berkshire. Berkshire is one of my favorite financial names out there. It's been probably one of my consistent winning trades through the year. And yeah, looking for a setup here. Got a nice little squeeze. Earnings aren't until August on Berkshire. Coming back into the daily 21, you can see that this is more so in an uptrend compared to Bank of America, where Bank of America was trading well below its daily 200. We have white over blue, blue over red. We're above the year-to-date VWAP. We have a nice squeeze here that's bullish. The oscillator here is bullish. Yellow over pink, and we're above the 50 mark. And overall, this signal is still active. Nothing to really complain about here on Berkshire. Sure, we're pulling in some and setting up a fresh squeeze here on Berkshire. I would hands down be looking at something like Berkshire, or let's see, let's take a look at JP Morgan, because JP Morgan's already reported earnings. Yeah, look at this compared to Bank of America also. JP Morgan, nice move off of its earnings, just kind of coming in some. I would wait a few days after earnings to see how she continues to shape up. But really, your next spot to take advantage of, the next zone you're looking at is about that 159, 160. And then, of course, if you want to go ahead and draw your Fibonacci levels here, especially on your big names, especially on your big tech names, go ahead and draw out your Fibonacci levels. Let me put out the 786 on this too. Yeah, you still got plenty of space here to that 157 mark. So JP Morgan still looks good. And if you haven't done so, check out MasterCard. MasterCard is at all-time lifetime highs, I do believe. Let's go up to a monthly. Yeah, this is a monthly chart on MasterCard. You have a big monthly squeeze here. Look at that. That is as bullish can get on this, on something like this. You have a big monthly squeeze here. We know the squeezes can last between 5 to 10 bars. I always say 5 to 10 just because, there's arguments that it's 8 to 10, but I like to use 5 to 10 because there's also the argument 5 to 10. So MasterCard looks pretty darn poised to move higher. You do have earnings coming up, but if they have positive earnings and, delinquencies are good and all that kind of good stuff, this could easily slingshot higher. So I'm definitely a fan of MasterCard. Let me put this back on a weekly. Let's check out American Express real quick. It's just since we're on the topic. AXP, yeah, I got this level here at 177 as it enters a new squeeze. If we break above 177, I'm looking for a move towards 183. Yeah, Discover Financial. Yeah, we'll take a look at that one. DFS. same thing. Not it's not at all time highs like Mastercard is, but you still have a nice daily squeeze here, a fresh squeeze, very mature. It's more than 4 bars. The oscillator is in bullish positioning. The thrust is bullish. I don't have many complaints. White over blue, blue over red. We're looking good here. You do have this big level here to work with. Just got to clear this 120 mark. Once you get above that 120, 121 zone, yeah, you're off to the races to about 130. So that's looking pretty good there at Discover Financials too. And keep in mind, you got earnings coming up as well. So you just got to be mindful, where things are, and where have things come from and where can they go. And yeah, Discover Financial, they look pretty good alongside MasterCard. I got a question here back to an oil name. Chevron, yeah, look, here, let's clear out some of these lines here. Clear, boom. No, I don't want to buy. Clear. We'll leave that one on. That one's kind of interesting. Prior support, kind of acting like it's kind of a zone right there at that 158 mark. So here on Chevron, yeah, kind of gives me the same vibe as Exxon Mobil, tight range between 160 and 150. So you got a 10-point range. Say if you do break below 150, what's going to be your measured move? Well, you're in about of a 10-point zone here. So you got 10 points to the upside and 10 points to the downside. That's going to be your measured move. If that was scary.
So cute. Is that Arnold?
Yeah.
Moose, I can hear you.
Moses is here.
I love open mics. Okay. He left. Moose with the open mic. All right. So here with CVX, yeah, if we do get a breakdown of 150, I will ultimately be looking for a move towards 140, which would actually be a revisit to this doji candle down here on Chevron. So that looks pretty good. Nice and clean. You also have you got a nice new squeeze going on. You got a downward thrust signal. This is neutral bear. Not the correct positioning just yet, but as this continues to move lower, it is trending lower. That is definitely a bearish signal here. So Chevron, we either wait for that breakdown of 150, make sure we don't get bear trapped at the same time. And we also want to watch for a bounce here back up towards 160. So if you're an Iron Condor fan, you might want to check this one out. Or if you are a fan of the wheel strategy, maybe keep an eye on this one too. Just got to make sure that 150 mark doesn't break down. That's a good shout. We'll write that one down too, because I don't mind that at all. So CVX to go along with ZOM. Those could be pretty interesting if things break down. All right, got some question here. I was reading a speak on the topping period for election years happen this time of the year. What are your thoughts on that? Yeah, so the election cycles, they're not really my cup of tea. I'll have to do some digging on that. I'll have to get back to you on that. Let me do my research on that. I kind of try to leave out the political stuff from my mind and from trading. I know there's obviously, politics can have an effect on the market and the cycles of everything, but, for the most part, let me get back to you on that because I don't want to give you a skewed answer. Let me do my research and get back to you, BBA Storm. But that is an interesting question. But at this moment, I'm not thinking about that. What I'm thinking about right now is price action and where the market can go this week and into, the end of the month. I'm not necessarily focusing on, probabilities of, the election and how that affects the market. That's not really how my brain works. But I'll do some research and maybe let A's chime in a little bit more on that because that's just not my style and it's not my flavor for the market. All right. Can you recap how we look at the dollar, the bonds, the HYG, explain the rates and authority that go up and down, correlation we should look at frequently on charts, and the VIX? Yeah. Okay. So the bonds, basically, when I'm looking at, I'm basically looking for confirmation on the market, especially when it comes to the NASDAQ, tech, the yields and how those yields affect tech and growth. So obviously, if I'm looking at the bonds, I'm looking at ZB. If the ZB goes up, that's generally, bonds tend to move in unison with tech. There has been some kind of disconnect, which has been interesting. One of those two is going to catch up. We've seen tech. I overlaid this a few weeks ago. I'll have to see if I still have that chart. But tech, of course, has been launching into outer space, whereas bonds have kind of just been trickling sideways to down. One of these things is going to happen. Either tech rolls down and catches up to bonds and bonds move higher, or bonds just absolutely blast off. If we do get a blast off on the bonds, then we need to pay attention to that uninversion. And when I mentioned the uninversion, it's not necessarily the let me bring this US 10-year versus US 02 year. I think this is the one I need. Let me bring this down to a month. All right, let's see. Hope I didn't remove my drawings on this. Let's do, maybe I did it the other way. US 02 year, US 10 year. I don't think it's that one. Could be. No, yeah, it's the other way around. Bear with me. 10-year. I must have removed my drawings for some dumb reason. I'll have to redraw them. Basically, the main concern here is the uninversion. Every time we've seen the uninversion, so this is COVID. This is the the Great Financial Crisis. You see how the yield curve uninverts. The problem isn't the inversion itself, it's the uninversion. I would suggest you set an alert really pretty much at this, I would say the 1 level, and kind of go from there if things start to get juicy. Now, if the 10-year yield starts to blast off, yeah, that could be something that we need to kind of pay attention to and maybe look out for like some kind of black swan event. But of course, we just gotta have to be mindful of that. That's not something to lose sleep over just yet. I've done some readings that within the cycles of everything, I think they're mainly looking at 2026, if I'm not mistaken, from what I've read, is for the next like big down cycle. It's kind of interesting. It's got a lot of math and charts. It's kind of crazy. I won't get into that too much because it's, it can make your head feel like it explodes. But as far as the bonds go, we want the bonds to move higher. Tech moves higher. Dollar moves lower. That can act as a tailwind because a weaker dollar is great, and it's great for earnings season too. So we want to just kind of be mindful of that, and yeah, just kind of move forward with that. Let me make sure. Let's see, my charts aren't loading up too well, so y'all still with me? Let me make sure here. Let's go back to the SPY at least. Okay, everything loaded up. I thought something was acting a little bit weird there for a moment. So we're back at SPY. All right. Oh, my dogs are barking. Wondering what they're going crazy. Oh, my wife must be back from going to the store. So there's an interesting dynamic there, Shills. We basically want to make sure the market is confirming with everybody. There's, you can do tons of economic reading on this, so I don't want to turn this into an economic lesson, but just understand that dollar down can act as a headwind, or excuse me, as a tailwind. Dollar up is, if we have a strong dollar, that means things can be kind of, now I don't know if y'all can hear my dogs, but they're going absolutely berserk because my wife just walked back into the door. If the dollar goes higher, that can act as a headwind, and it's also hard for growth names to pick up the pace on their end. And then, of course, higher yields is bad in general, especially for growth names and small caps and big tech. So keep that in mind. But yeah, I do want to watch the HYG, the junk bonds, because the junk bonds, it's the junk. It's the junk of the junk. And if all of this is moving higher, then that's a fantastic, very bullish sign for the overall market here. So we move higher. And if we can confirm this move towards 77, fantastic. But of course, if we roll over, that is not a good sign for the most of the market. So we'll go from there. So yeah, HYG, just kind of do your homework. I'll try to explain a little bit more tomorrow for sure, but I know we're kind of pressed on time here as we move ahead. Let's see. I've got a few more questions here. What do I think about calls on UNH or HCA? I think they keep on going. Now, United Healthcare just had their earnings. They do have a slight gap here to fill. Let me bring in this chart, actually. Maybe make it look a little bit cleaner here. All right, so this is a pretty big level here on UNH, this 483 mark. If we can clear 483, you do have a small gap fill here towards 490. And then from 490, you're talking about the next level at about 501, 500. So if UNH can continue to make a good, strong headway, then yeah, that's definitely good for the Dow, because the Dow will then break out at that point. But you do remember that, you are below the daily 200. You're in bearish territory overall, so you see you're not in good bullish structure. But if we do have that rotation, keep in mind that healthcare names can take the charge here. So got to be patient, got to see what's kind of going on, see how this week starts. Now we did hold this support level down here at 448. Had a nice little double bottom up here and blast off there. So the start really is, if you want to be longer term bullish, you want to get above the daily 200. If you're a short term momentum trader, then yeah, look for this break above 483, take the break and have a target at 490. From 490, you're looking at 500, which would put you back at the prior resistance zone, also the daily 200. So if you're a short-term momentum trader, this has some good potential setup. If you're a longer-term trader, then I would just probably be a little bit more patient till things clear up. And if it can pretty much, break out a little bit further to confirm this. So yeah, you got an interesting spot here for sure. You got a weekly squeeze. You got a weekly up arrow here also. So it's not too bad. I like the momentum trade for sure. And we'll see what happens. Longer term, I'll probably wait a little bit longer. Let's see, what else do we got? Let's see, we looked at DFS. Let's take a look at Airbnb. Let's see, we got PayPal, Mara. All right, Airbnb, it's one of those things. You've come all the way up here to this 144 level. You had this nice breakout move. All this, we call it the crap beta names, where they have good beta, but they're crap, But Airbnb, we know travel names have been picking up steam. Airbnb, RCL, the airlines, cruise lines, they've all been doing pretty darn good here, and Airbnb is no exception here. You've had a pretty good move here towards 144. Now my question is, do you really want to buy up here? Probably not. If I'm looking to buy on Airbnb, I'm looking to get in down here, especially down here at the daily 21. That seems to be your launch pad. Now, if we do break out above 144, sure, you got room to go, but you're coming up here on possibly I wouldn't say an empty tank gas, but you're just kind of running smack into big resistance here at this 144 area. So what I would want to see here is, if we do, that was a pretty good close here. It's not a shooter candle like big tech was like that. So this is actually a pretty good candle to close on. That could give us some evidence that things want to break out. But I do want to say that Airbnb is not going to carry the market. If Apple is down 1% to 2%, that's probably going to have a drag effect on the rest of the market, such as Airbnb. So I would just kind of be patient, let this set back up, and look for a better entry, whether that's down here at the daily 21 or whether that is on your hourly time frame where it pulls back to at least the hourly 21 and retest this 139.50 mark and move up from there. So looking pretty interesting here on Airbnb. It's very bullish, don't get me wrong. Just kind of coming into key levels of resistance when the overall market is at 3 standard deviation. You know, it's definitely a weird spot to be at right now. So that was Airbnb. I got to get better at doing these little text things on the side. All right, let's go over to PayPal. PayPal. All right. Let's go over to that. Let's check out PayPal. Yeah, PayPal's been an interesting one. Now, you can see that you've already kind of hit all my targets up here. You had this nice resistance zone at 69. You're now trading, you're in this little bit of a gap fill towards 75. You're still below the daily 200. Yeah, still one of those things. Tech is at 3 standard deviations. It's probably gonna become repetitive at this point, especially when you're looking at big tech. Do you want to buy it up here, or do you want to buy it at a retest? I'd personally wait for a retest on this 69 level, see if that gives you some juice, maybe set up a new squeeze and kind of go from there. But at this point, I'm not interested in buying PayPal at this current time. You do have earnings coming up, maybe see if there's any kind of options flow. But for the most part, if you want to fully gap fill, I mean, there's your gap fill at 75.50. But what I would like to see is at least a retest of 71 if you can get it. This was prior support before you gap below it. So 71 acts as support. This could be your aggressive entry to go back up towards 75. And then, of course, your conservative entry is going to be down here at about 69.5. So you have some pretty interesting choices here. So you can either buy the dip at 71 or you can buy the dip at 69. Looking at the signals, though, you got some good upward thrust. This is still not correct. You see, this is still really in bearish territory. Even though you do have the crossover, you're still below 50. Yeah, so this isn't quite right. And when that isn't right, you just look at the thrust. And you're still in a buy cycle here. You see how you're coming up. You haven't come back down yet. That's just how oscillators work. I would just kind of see gap fill to that 200. Aggressive buy would be 71. Conservative buy would be a retest of 69. So that's how it would be playing it. I would just be, like I said, just a little bit patient here and see how tomorrow, maybe even Tuesday, shapes up. And then, of course, you got earnings on Netflix and Tesla, which they could move the market. Obviously, they have big weightings, especially within, PayPal's not in the same sector. So, just kind of pay attention to how the overall broader market is responding. But PayPal, shorter term, okay. I would just like to see where that pullback lands you. Good question. Deep thinking made me think deep on that one. But all right, you definitely do have a tradable bottom too, just to point that out. 58 is your low. Obviously, if you're a long-term investor, you don't want to see that break below. And then, of course, yeah, just kind of play your cards there and just be safe. We know that some of these junk names are coming back to life a little bit, and that's just the frothiness of the market. And just keep in mind that PayPal was trading at $310. It's now trading, hit lows of the 50s there. Just kind of keep that in mind too. There's probably stronger names out there than PayPal where I would want to put my money to work. Mara, yeah, crypto names, they've been the talk of the town, it seems. We've been looking at and playing some of these crypto names for a while. I still even have shares of Hut that I'm still kind of hanging on to. I've sold a good bit. I'm just kind of holding on to a few there. But Mara, remember when we take a look at crypto names, we have to look at Bitcoin. And Bitcoin, as it sits is. Let me see here. Let's get that out. Let's put this chart. I like to use TradingView for this chart. We're just kind of in the zone here. We haven't broken out and we haven't broken down either. Now, I will say that we had this really strong attempt on Thursday only to sell off. And to me, that's a little bit concerning. That's a hard rejection at 31.5. But like I said, we're not breaking out. We're not breaking up either. And until that happens, crypto is a little bit interesting, especially when it comes to your miner names. Obviously, if Bitcoin breaks above 31.5, that sets your stage for really 33 and a half. But if it breaks down, yeah, it can get a little ugly real quick. So we want to make sure that this kind of keeps its structure and momentum can continue to carry. But otherwise, we're just in a holding pattern. Granted, a lot of these miner names have been front running for the most part. I mean, we've seen big moves from Mara, Riot, Coinbase, MSTR. My personal favorites are Mara and MSTR. Yeah, Mara, you've had a really strong bullish run. You haven't had any kind of pullback here on the daily chart. I mean, this is just, mooning, so to speak. And, you came up into resistance at this 18. If you look at your weekly chart, zone out, and that's where you're running into a pretty good resistance level. Obviously, this chart is still looking pretty decent. I would like to see a pullback, and this pullback can be kind of deep. You're talking about a 4-point move to the mean here, and you haven't really developed any. Well, you probably support. Yeah, you've built up some support down here, so that's good to see. So you got some area of confluence down here at this 1460 mark. So as far as Mara goes, interesting rejection, maybe a little bit of a bull trap right here. This thing could pull back in towards 1460. Obviously, the hourly charts, the smaller time frame charts are still looking pretty good, but you're in a sell cycle right now. What I want to see here on the 30-minute is for things to rotate back up and you get a new buy arrow, and then that would send us higher from there. So look for at least a 30-minute squeeze, even a 15-minute squeeze. I think the 15-minute charts will serve you well in this market, especially, how fast things are probably going to start moving here, and especially where we are at overall. So that's looking interesting. So Mara, I would probably be a little bit patient here. You're at resistance. You might have a bull trap here. I'm not a buyer here. You should have been selling on the way up. And now at this point, yeah, look to see where you can reload the boat here. And especially if Bitcoin can break out. If you come back in, you get a new buy arrow here. Yeah, that looks like a good possible dip to buy. I don't see why not, because you have good bullish structure. Overall, you're white over blue, blue over red. That looks good. You can see, too, that the squeeze histogram has also run its course. So looking for some blue bars here. That means just momentum is fading and volatility is decreasing. Remember, the squeeze indicator is a volatility indicator. And you've had huge compression here. We played the breakout. And, yeah, now we're just going through the cycle at this point. So we'll just have to wait and see. I'm not a buyer. I would have to wait to see how the pullback, how she responds to a pullback. Same thing there with coin and all the other crypto names. All right, so let me give y'all some names that I'm looking at going into the week. And of course, if you have any more ticker requests, feel free to shout them out. Oh, we got Meta. Excuse me. We got Meta. That's the last one. Yeah, Meta is just... Look, you've had this incredible move on Meta. Meta has been the most bullish name of the year. Communication sector has been hot. Now, we do have earnings season coming up. For earnings, was that July? That says the 26th, so we'll go with it. Now, here for earnings, we've had the past two earnings seasons. They have been gap and goes. This is a very bullish name. Now, and they just released Threads. We'll see if that has any impact on their earnings. But yeah, is this going to be a three-peat where we gap up and go yet again? Obviously, I'm kind of leaning bullish on the chart. I'm leaning bullish on the earnings at this point, just based on these past two performances. I'm probably not going to take a bet on it, but it's we'll see, I guess. Let me kind of do some research on that. I'm probably not going to be betting on earnings, but I'm leaning that it does have a bullish move, and I would have to take a look at the options chain and do a spread. I'm not going to go naked calls into earnings. I'd rather have do a spread where I reduce my risk a little bit, and just to see where the expected measured move is and where the open interest and all that, where all the players are at. But look, if we look at meta here, I mean, how bullish can you be? You still have a slight gap to fill towards 323. Yeah, I don't have any complaints here other than the fact that it's way up there. And, you know, you can say it with me at this point. The NASDAQ's at 3 standard deviation, which mathematically speaking, 0.3% of moving higher at that level. So probability speaking, I have to wait. I have to wait to see how these big tech names respond to a pullback, whether that's a pullback to the hourly 21 or a pullback all the way to the daily 21, which in this case on Meta, that's 10 points. Even if you pull back 10 points, you're still in a very strong uptrend. And there's no immediate direct threat on this name. I mean, we've had buy signals on Meta since the Q4 earnings report back in January. So, I mean, this thing is still very much so intact and moving pretty darn well. So I'm not too concerned here. Now, if you're looking for price targets on that, yeah, 323 is your gap fill if she wants to move higher. And support 300 is going to be a psychological support, 290 your dynamic support, and then 281 to 271 is your Fibonacci zone there that you're going to want to work with. So Meta, very bullish, got earnings coming up. NASDAQ, just crazy 3 standard deviation. Say it with me. All right, so let's take a look at a few names that I'm looking at. First one, I was reading PayPal. John Deere. Yeah, she thinks my tractor's sexy. Yeah, you got a nice little squeeze here forming up. If this does break out, 432 is going to be my overall target. Based upon the options chain, I'm probably going to come over here and look at the August options, the August monthlies, and possibly do I can either do a spread. I might just go out to, let me see where some open interest is at. Not there, that's for sure. Yeah, we may have to go to the August. Now, they are a little bit pricey, so if need be, you can spread it. Of course, we're going into the monthly expirations this week. We have OPEX. We'll just see if there's any kind of rotation here, or you can always just buy shares if you don't want to do options at all. You can always just buy shares, buy 418. You have a clear stop to work with at about this 400 level. And then 432 is your PT1 and 441 is PT2 on John Deere. So I'm liking John Deere. We already highlighted ZOM, of course, to some possible downside. Let's see, ADI is another good one. This one's at fresh all-time highs. It did give us a little bit of a pullback on Friday. We have a little bit of a squeeze to work with. We'll see if this has any kind of impact if tech does pull back in. And, of course, we got the rebalancing situation that we've got to pay attention to. So ADI is another good one. I am paying attention to Amazon because this squeeze looks incredibly, incredibly good. Walmart, keep an eye on this one because Walmart is coming back into support here on a pullback with a daily squeeze. You can see that we hit our head right here at the 158 mark. Now we're coming back into 153. So if you're an Iron Condor fan, this one's probably right up your alley. Just make sure you don't break down below 153 or 152.5, which is your daily 50 area here. So you're at a pretty good level of support on Walmart to try to take you back up into 158. That one is going to be on watch this week. Let's see, we talked about AXP, we talked about Berkshire. Google is at an interesting spot also. Yeah, this thing looked like it wanted to roll over on its daily squeeze, but look what's happened here. Thursday, you had an incredibly bullish move here, and you got some follow through on Friday. You got a newly printed buy signal here. And yeah, if the communication sector, which includes Google and Meta, if this wants to hold up steady, yeah, I'm looking for another move back up towards 130. And if you get a breakout above 130, you're looking at about 135 and 140 as your next target. So Google still looks pretty darn juicy. It's a great long-term name. Nothing, no question about that. Let's see. Let's give you a few more here. Tesla, of course, has earnings this week. Tesla held support at the 265 level. We bounced back up to 284. If we break above 284, looking for really 300 to 315. Of course, just be mindful of that earnings. Let's see what the expected move is on Tesla. Okay, the market makers are expecting a plus or minus 19 points. That would actually put you close to that 314 level. Just keep in mind that IV on Tesla is going to be incredibly high, so mind your P's and Q's on that. Earnings are on Wednesday after the bell. Let's see, let me give you another one. We talked about Berkshire. Let's see, Old Dominion Freight. This is a transport name. Old Dominion Freight is at all-time highs. Clear blue skies ahead, especially if it can clear 381. Once you clear 381, you're pretty much rocking and rolling. I think you head at least up to 400, no doubt about that. We got Cisco on watch also. It just needs to clear 5235. I know it got whacked on Friday. We'll see if it can gather itself back up in this 2150 zone and go from there. But yeah, a little bit damaged on the shorter time frames. IRM, we talked about this one last week. This one's breaking out into all-time highs. Great for common shares. You're looking for a move towards 64, 62 and a half and 64. Let's see. Let's go to SO, a Southern Company. If we do see some kind of rotation into defensives, yeah, Southern Company looks pretty good above 72.55. Let's see. What else do I want to give you here? Let's go over to Pepsi. Like I said, we took a small position here on Pepsi. Nice daily squeeze, breaking out of 188, looking for continuation towards 191. I have August contracts on that one. Let's see. Yeah, we got the August 190s on Pepsi. So looking for that to push towards 191. Let's see. That still looks pretty good. Let's see. We talked about, oh yeah, let's go to Zoom. Zoom's at an interesting spot. You got a nice little daily squeeze. Let's see if we can clear this daily 200 at 72. If we can clear 72, that really does set the stage up for, even 85. So I want to pay attention to Zoom. Maybe it's I can't remember the short interest on that one, if it has a large short interest or not, but kind of pay attention to that. 72, looking for a move towards at least 75 to 80 for sure on ZM. Of course, we've played Art K pretty well, had that nice breakout. Overall target still 52.43. It's looking pretty good. I would like to see a pullback at this point in time to load the boat some more. Just kind of come back in, maybe retest 45, and then go for another wave there. So yeah, Art K. Yeah, Kathy Wood is making us some money lately. Yeah, just gotta wait for that one to cycle back through. And yeah, other than that, watching big tech. Apple hasn't done anything at all past few days, just consolidating. If it does break 191, look for 192. If we happen to break 190, look for a move at least to 188 on Apple. Like I said, it hasn't really done much. Microsoft was impressive this past week. If we can see a clear move above 351, you got all-time highs or lifetime highs. We'll have to see. Like I said, QQQ, 3 standard deviation, yada, yada, yada. Also rebalancing. So got some interesting stuff there. Yeah, just, overall, keep an eye on these small caps, and the Dow transports look really good also. That's why you got Old Dominion Freight, you got UNP, that's another good one. Not as good looking as Old Dominion, but this one's had a great move this past week. You can see all my levels have been cleared here. You're looking for 215 next. You also got CSX. This one looks pretty interesting too. You got a freshly daily squeeze shaping up and just got a clear 34. And I think you're looking pretty good there. All right. I think that'll wrap it up for me. We've kind of gone over, so I appreciate y'all hanging out with me tonight. Any questions, concerns? SPY, we're at a pretty good spot here. 451.76 to clear on the upside. NASDAQ, we're at 3 standard deviations with a lot of shooter candles out there. AMD, nasty candle on AMD. If it can hold 116, great. That would set you back up to push higher, but you can see that there was a lot of selling pressure here on Friday. So 116 to hold on AMD. Even NVIDIA got hit pretty good. That's a pretty nasty candle there on NVIDIA on high volume. We'll see how this shapes up this week. Let's see. You also have IBM is probably an interesting one this week as it has earnings. Entering a squeeze on that also. So if we do break above 135, that sets you up for a move towards 138, 140. Yeah, you got earnings coming up, so be mindful of that. Other than that, banks continue again on Tuesday. Oh, tomorrow and Tuesday. And then we got Tesla and Netflix earnings, IBM earnings on Wednesday, Discover earnings on Wednesday too. You got Johnson & Johnson earnings on Thursday. CSX, Capital One, and then Friday you got American Express readings and Schlumberger. AutoNation too, that's a good one. All right, so watch ZOM, John Deere, ZM, Walmart, ADP, ADI, Iron Mountain. A lot of good stuff, a lot of good setups out there to pay attention to. Y'all have a good evening. Enjoy the rest of your Sunday night. I will be with you guys tomorrow morning. Tuesday, I do have a daughter's appointment, but I should be back in time for the live. And then, of course, we'll be live on the socials on Wednesday. If you want to join us on Wednesday, we'll be streaming. We'll be live trading on Wednesday as well for you guys. But all right, I'll see you guys in the morning. Y'all have a great evening. Thanks for taking your time and hanging out with me. Have a good Sunday. See you tomorrow. Bye, guys.